gold's price rose, reaching new record high levels before correcting lower and stabilizing somewhat over the past few days. We highlight the upcoming period as particularly turbulent given the US elections today and the Fed's interest rate decision on Thursday. For a rounder view, we are going to conclude the report with a technical analysis of the gold's daily chart. The negative correlation between the dollar and gold prices has been inactive as gold has not gained despite the dollar weakening against other currencies in recent days. We see the case fundamental issues to continue affecting the two trading instruments in a different manner, while fundamental issues at the geopolitical level may have allowed for the precious metals price to form its own course. Overall, we continue to see the case for the negative correlation of the shiny metal and the greenback to remain inactive, given also the high number and magnitude of fundamental issues tantalizing the markets at the current stage. Similarly, the negative correlation of gold's price with US bond yields is also interrupted, given that the 2, 5, 7 and 10-year US bond yields continue to rise over the past week, yet the appeal of the US bonds remain insignificant for gold traders to switch to US bonds as an alternative safe haven investment, allowing for gold price to remain relatively stable. Yet we remain vigilant for a possible resurfacing of the dollar-gold negative correlation, especially given the high-impact events expected from the US in the week. Harris and Trump have made their last pitch to American voters before the US elections today, with rallies in Philadelphia and Michigan respectively. The uncertainty regarding the outcome is high, given that the two candidates, Kamala Harris and Donald Trump, are neck-to-neck in key swing states, with each candidate providing a very different vision for the US. At the same time, the stakes are also high, given that nothing less than the future outlook of the strongest country in the world is in limbo. The outcome may prove to be messy, as also all the seats of the US House of Parliament and a third of the seats of the US Senate are to be contested. Regardless of the outcome, the US election results are expected to be a big market mover. Additionally, if either of the presidential candidates contests the initial results, volatility may be extended. In regard to gold, we see the case for a possible extension of the uncertainty to provide safe haven inflows for the precious metal, while a clear-cut win of any candidate could ease market worries and allow for safe haven outflows for gold, thus weakening its price. Besides the US elections, we also highlight the release of the Fed's interest rate decision on Thursday. The bank is widely expected to cut rates for 25 basis points, and Fed fund futures imply a probability of 98.5% for such a scenario to materialize, practically rendering the interest rate part of the decision as an open and shut case for traders. Yet the market seems to expect the bank to continue cutting rates also in December before taking a break on January next year. Should the bank, in its forward guidance included in the accompanying statement and Fed Chairman Powell's following press conference, imply some hawkish intentions that could contradict the market's expectations, we may see the release weighing somewhat on gold's price. On the contrary, should the Fed indicate that more rate cuts are coming, practically verifying the market's expectations, we may see gold's price getting some additional support. Before we start our technical analysis, we note that the recalibrated support and resistance level, in order to accommodate the possibility of higher volatility in the coming days, and at the same time to better reflect the data provided by the price action since our last report. In the past week, gold's price formed new record highs by reaching the 2,790 resistance level, correcting lower and stabilizing between the 2,685 support line and R1. For the time being, we note that the stabilization of gold's price, yet we also note the upward trend line which has been guiding the precious metals price since the 8th of August. Furthermore, we also note that the RSI indicator remains between the readings of 50 and 70, implying a bullish predisposition on behalf of the markets for the precious metal. Yet for the bullish outlook to be maintained, gold's price will have to break the 2,790 resistance line and reset as the next possible target for the precious metal, the 2,900 level. Should the bears take over, we may see gold's price falling, breaking initially the pre-mentioned upwards trend line in a first signal that the upwards movement has been interrupted, and continue to break the 2,685 support line and actively aim for the 2,600 support barrier. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you a solid trading.